What if your government just got a mind-blowing 8.86 trillion and you didn't even know where it came from? That's the story unfolding now as the NNPC, Nigerian National Petroleum Company Limited, reportedly remitted 8.86 trillion to the federal government in 2025, a move that could dramatically reshape Nigeria's fiscal outlook, but also raises big questions about transparency, resource use, and accountability. 1. What was announced? The big remittance. According to The Point Nigeria, the NNPC has boosted the federal government's coffers by 8.86 trillion via remittances in 2025. This sum represents statutory payments, profit oil allocations, and other required contributions from oil operations. The news was widely circulated, highlighting a 98% jump in remittances over a certain period, indicating a steep increase in revenue inflows from the petroleum sector. LinkedIn commentary referencing Business Day. While many welcome the move as a revenue boost, analysts and civil society are probing its sustainability, allocation, and the real gains for citizens. 2. How Nigeria's oil revenue mechanisms work. To understand the weight of 8.86 trillion, one must know how oil revenue flows in Nigeria. Cost oil, operating costs. A portion of crude is used to recoup production and operating costs. Profit oil, profit sharing. The remaining oil is shared between host, investors, and government. Statutory remittances. These include taxes, royalties, dividends, and other financial obligations to government. Other deductions. In recent years, NNPC also has to channel funds into areas like frontier exploration, management fees, etc. In many recent reports, despite large profits, questions have been raised about how much of the oil wealth actually flows to the Federation account or trickles down to states and communities. For instance, one article notes that NNPC declared 1.06 trillion profit over 8 months of 2025, but the Federation received zero in dividend in that period. This disconnect between profits and actual remittances has long fueled debates about accountability and the missing billions in Nigeria's petroleum sector. 3. Why the surge matters and what it could mean. Potential upsides. Budgetary relief. 8.86 trillion is a significant boost to revenue. It could help plug fiscal gaps, fund infrastructure, service debts, or support social programs. Investor confidence. Strong remittance figures can signal that Nigeria's oil sector is yielding, which may attract further investment. Political leverage. The government can use such figures as evidence of improved management, transparency, or economic turnaround. Risks, gaps, and skepticism. Is this level of remittance repeatable? Oil markets are volatile, and global headwinds like crude price swings and demand shifts can undo these gains. Transparency and tracking. Where exactly will the 8.86 trillion be spent? Without clear published accounts, citizens may never see its benefits. Equity and distribution. Will the gains reach states, local governments, and fuel development in underdeveloped regions? Mismatch with dividend behavior. If previous profits showed big numbers but little or no dividend to the Federation, as in that 8-month example, Daily Report, then the public has reason to question whether remittances are just an accounting change, not a real-world resource shift. 5. Questions and red flags to watch. Is the 8.86 trillion figure inflated? Remittances sometimes include internal adjustments, notional payments, or transfers between government entities. What proportion goes to debt service versus capital projects? A large chunk may be used to service existing obligations rather than new growth. Which oil fields or contracts bore the burden? Some oil blocks may be underperforming or heavily taxed. Does this set expectations too high? If future remittances dip, the contrast may trigger public frustration or political backlash. 6. What citizens and stakeholders should demand. 1. Line item breakdowns. Each remittance should be traceable. What portion is royalty, dividends, taxes, etc. 2. Published audit reports. Independent audits must verify that funds reached intended projects. 3. Accountability for underperforming fields. If certain areas aren't yielding, contracts should be reviewed. 4. Clear budget alignment. The government should tie remittance flows to infrastructure, education, health, etc., and publicly report on impact. 5. Civic oversight. NGOs, media, and stakeholders should vigilantly monitor how funds are used in local development, not just national headlines. 6. Setting realistic expectations. While 8.86 trillion is a headline-grabbing number, it's essential to remember, oil is cyclical, not a guaranteed foundation. Past record in Nigeria's oil sector has seen boom numbers and missing billions. Political will, institutional strength, and corruption control now matter more than raw revenue. If Nigeria is to turn such remittances into real change, it's not enough to collect the money. It must be used wisely, visibly, and equitably. Otherwise, 8.86 trillion may end up as another statistic in a longer story of resource frustration.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.